Good evening, friends. I've reached quite late from the office and then took some couple of hours to analyze the market, and therefore I could not prepare the video and preparing it so late in the night. Friends, what did I say the earlier day? Above 17,868, I shall take a call with the first target of 17,970, 17,972, keep SL 40 points in index. Friends, the market opened at 17. It opened at 17,897, which is above 17,868, and went up. And if you see, friends, exactly at 17,970, it took a resistance and came down. Then it went into a band. Then what I said, at 17,970 or 17,900, if the market reaches and does a reversal chin 2, the chin 2 word was, I emphasized on the chin 2 and I also emphasized on this black line, that if it takes a reversal chin 2 on this black line, then take a put a SL of 10 points, target of 18,868. Friends, at 2010, it did the reversal chin 2, if you see here, and from there it came down. But friends, there's two things. One is doing the planning in the earlier day, understanding the videos, understanding the chart, everything the earlier day, and the most important part is the execution the next day. Most of us fail in the execution the next day. Friends, my plan was exactly perfect, picture perfect plan. I could have captured this, which I could not because I was outside. And then I should have left the market from here to here and only captured this. But then, execution in the market and greed in the market takes over, even for a disciplined trader like me, which I consider myself a very disciplined trader, but still it takes over. So I took a put here. I don't know why I took a put here, but I took a put here. I made a loss here, but then I could make up that loss. But at the end of the day, friends, I'll show you my P&L, which I will show every day now. And I ended up in a loss of 1.23 lakhs. So friends, stay calm in the market. Whatever you have planned the earlier day, go as per the plan. If the market is not as per the plan, do not trade. Okay. So that's what happened today. Market did not give anything to anybody. It just went in a band. So let's see what can happen tomorrow. Friends, if you see the data for tomorrow, so the retailers have done a call writing on 9th September. They were at 53.55. They have gone to 84,588, which is 30,000. They have increased the call writing. The pros have maintained. The FIs have increased the call buying from 1.2 lakhs to 1.5 lakhs to 30,000 buying. In put writing, the retailers have reduced the put writing from 2.6 lakhs to 1.7 lakh. That's a 92,000 reduction, and was supplied by the pros. The pros have increased their put writing to 82,009. Now, so if I summarize it, what happens is that these two columns are on the daily basis, and this is the overall view. So FIs today have they have shown bullish. The pros on the call side, they have maintained their call writing. They have maintained the bearish stand. They have just maintained it. And the retailers on the call side, they have increased the call writing, so they have gone bearish. Similarly, on the puts, the FIs have maintained their bearish stand because they are more or less the same. The pros, they have gone bullish because they have increased their put writing, and the retailers have gone bearish on the today's scenario, the change scenario, because they have reduced the put writing. But overall, if you see, the FIs are still bullish because they have so much of calls. The pros continue to remain bearish on the call side. The retailers continue to remain bearish because they are net call writers. Similarly, on the put side, the FIs have so much of put, 2,17,000, they continue to be bearish. The pros continue to be bullish because they have returned the calls, they returned the put, sorry, and the retailers continue to be bullish. Now, friends, if the market opens gap up, who benefits? Now, let's see. Now, this is the FIs call buying, and this 1.5 lakhs is the call buying, and 1.24 is the put selling by the pros. So if I add up these two, this plus this is 2.76. 2.76 lakhs is what is on the bullish side. What is there on the bearish side? So I'll add the put writing. So I add the put buying by the FIs and the pros, and the put writing and the call writing by the pros. I will add the put buying by the FIs and the call writing by the pros. So 2.8. Difference between these two is hardly 8,000 contracts. So which basically means that, friends, if the market opens gap up, I am expecting it to come down, and if it opens gap down, I'm expecting it to go up. So this is my first general view. If it opens gap up, I'm expecting it to come down. If it opens gap down, I'm expecting it to go. This is my overall view, but let's see what the other views state. Now, friends, there's a good thing that happened today. I mean, a big thing that happened today on the first candle. Now, if you see the first candle, this candle, there are certain things that happen in the first candle, which is very important for us to know, and I'll show it to you. So as a psychology, when the market goes up, the retailers write calls and they buy put. The smart money, they buy calls and they sell put. Okay, this is the normal psychology of the retailers. And when the market goes down, they will write put and buy calls. And smart money, they will write calls and buy put. Now remember these time zones, which I follow. 9:15 to 10:30 is FII retailer plus pro zone. 10:30 to 2 p.m. is retailer zone. These people are not very active, FIIs and pro, during this period. And 2 p.m. to 3:15 is FII pro zone. Now, in the call, if you see retailers have sold calls of 32, 33, they have increased the call rate from 54,000 to 84,000. The pros have remained neutral for the day and continues the call rating of 66,000. No major change from the earlier day. And FIs are net buys of call and have increased from 30,000, increased by 30,000 from 120 to 150. Similarly, I have defined the pro. Now, friends, I just analyzed this movement. This movement I analyzed. What exactly happened in the movement? Because it's important for us to understand what happened in this movement so as to understand how the market will move. So in this movement from 9:15 to 10:15, now if you see this, 9:15 to 9:20, there was a green candle and the only candle which was short covering. The rest, all candles up to 10:20 was short build-up or long build-up. This was the first candle with the short covering, and 2 lakh contracts were exchanged in this particular short covering. Where do I get this data from? I get this data from the OI Pulse, the future movement analysis, and this is what I have in detail analyzed. Okay, I'll not get into the detail. If there is a webinar that I do, I'll explain you how I get this data. But let's go forward in this. So short covering candle was green. Then the next candle was red. It was short build up 1.59. Then green long build up, short build up, long build up, long build up, short build up, long build up, and so on and so forth. If I summarize this whole thing, 9:15 to 9:20, the first candle itself had only one short covering of 2 lakh. Then there's a short build-up of 7.8 lakh contracts and a long build-up of 9.26 lakh contracts. Now, what does this mean? So in the first 1.5 hours, there was only one short covering, which was the first candle. Now that the market opened gap up. So if you see the market, if I see the market, where is the market? Here's the market. Market opened gap up. Now, when the market opens gap up and there's a short covering, then who gets panicked? Who gets panicked and who will do short covering? The retailers, especially who have carried forward, carried forward puts or return calls. Therefore, in the first candle, the retailers closed the call writing and the FIs bought the same. Now, this particular call writing that happened, now here, the retailers closed the call writing and FIs supplied them. Now, I go back to my analysis. Therefore, in the first candle, the retailers closed the call writing and the FIs bought the same. And this, the FIs carried over. Now, if you see where the price closed today, let's go back to the price. Now, if you see where the price closed today, the price closed exactly above the first candle. The FIs, these FIs are still in profits. Now, if you see the FIs, they have increased their calls, but they are still in profits even when the market has come down from here to here. Because those who have taken the calls here, the earlier day, they're in profits. The carry forward of 1.2 lakh contracts. And those people who took call in the first candle itself, they also are in profits even when the market came down, and it did not allow it to come down below the first candle. Okay. So if you see when the price closed today at the FI still in profits, and the end of the day, since the price did not come down below the first candle, even at the close, this is in addition to the carry forward of calls that they had bought from yesterday, which is now giving them good profits, despite the market coming down from the high of 17,980. Now, in order to maintain the profit, these FIIs who are holding the longs would definitely try to maintain the market above the first candle of today, which is 17,987. So if these FIIs have to be in profits, they have to maintain the price above 17,987, above this candle, which is 17. Wait 1 second. No, it's not 17,987. Sorry, 17. This candle high is how much? 17,925. Yeah, 17,920. About 17,925. My apologies. Okay. The maximum put writing has been done between 9:30 and 10:30. Between 9:30 and 10:30, yes, the maximum put writing happened. How many put writings happened? 1 crore units happened, or 3,22,000 contracts of put writing happened within this 1 hour. And this was done by pros, of which they have carried over 82,009 contracts. They have carried over 82,009 contracts. These contracts were written between, here, 9:30 to 10:30. Between here, 9:30 to 10:30, in this period. Okay. Now, since these contracts were written between 17,950 and 17,960, as such, below this, all this would come to risk. So all these people, including the FIs, would come to risk if the market comes down below 17,950, or to more precise, 17,900. So they will try their level best not to allow the market to come down below 17,900 tomorrow. So one level that I'll be keeping a very close watch is 17,900. Now, as per the chart, the level below which Nifty would give a bearish signal would be 17,930. Now, below this, if the market opens below this or comes down below this, then it will give a bearish signal. But that's not a signal for us to go short. Our signal to go short would be here, scenario 1. When can I take a trade on the downside? On the break of 17,900, on a 5-minute candle, I will take a put with SL of 17,930. So if it breaks 17,900, this point, 17, this consolidation point. So if it breaks 17,900 on a 5-minute candle, which means then all these people who have written, they will come into risk. Okay. So when they come into risk, they will exit, and that will push the market down. So on a break of 17,900 on a 5-minute candle, I'll take a put with the SL of 17,930 and target of 17,808. I do not expect the market to go down below 17,808, which is this particular point, 17,800 or 17, this particular point, 17,800. But if it comes down below this, then there is a much more gap. But I don't expect that to happen tomorrow. So that's on the bearish side. Now, what happens if at 17,900 the market comes at 17,900, and I'm expecting that at 17,900 the market will take a support. So what I'm expecting is that at 17,900, at this particular point of 17,900, the market will take a support. And if the market takes a support at this point, then I shall take a call with an SL of 17,880. This will be my SL 17,880. This point will be my SL 17,880. And with that SL, I will take a call. So friends, if the market comes down below 17,900, okay, wait for a 5-minute. If the market comes down below 17,900, wait for a 5-minute candle to close below that. And if it does so, then take a put. I will take a put with an SL of 17,930 and a target of 17,808. Now, if the market takes a support at 17,900, the probability of which is very high, then I shall take a call with an SL of 17,880. In scenario 3, now if the market opens in between 17,992 and 17,923, okay, 925, 17,992 and 17,925. Now this is a no trading zone. Remember this. This particular point, this particular zone, 17,992 and 17,925, is a clear no trading zone. Do not take a trade in this. If the market opens flat, if it opens flat and crosses 17,992, remember only on opening flat or slight gap down, then cross 17,992 on a 5-minute candle, then I shall take a call with SL 30 points and target of 18,114. So if the market is opening flat somewhere here, not much gap down, but somewhere here, nearer to this line, nearer to 17,190, somewhere here, above 17,963. If it opens flat somewhere here and it crosses and goes up, and on a 5-minute candle it closes above 17,992, I shall take a call with my target as here. I'll tell you what my target is. 1 second. This would be my target, 18,114. This will be my target, 18,114. Okay, that's my target now. So on the upside, what I'm seeing is that if it opens flat and crosses this, then my target will be 18,114. Remember, very clear, repeating it again and again. If it opens flat and slowly it goes up and crosses it before 11:30. Before 11, if it opens flat, spend some time, and then before 11:30 crosses 17,992, then I will take a call and my target will be 18,113, and my SL for this would be 30 points in this trade. This would be a very good trade if it happens. Second, if the market opens gap up, okay, but gap up how much? Market has closed at 17,931. So 17,931 plus 100 points is 18,031. So if the market opens gap up but below 18,031, and I am drawing this particular line below 18,032, let's say. Okay, so this is the 100-point gap. If the gap up is less than 100 points, and after opening here, it then forms continuous green candles, 1 green candle, 2 green candle, 3 green candle, 4 green candle. Sorry, if it forms continuous red candle, my apologies, since I'm doing it live on the floor, it happened to me. So if it is opening at 18,032 or less than that, less than 100 points, I repeat, less than 100 points, and then it forms continuous red candle, 1 red candle, 2 red candle, 3 red candle, 4 red candle, like this. And with that red candles, it comes down and crosses and settles on a 5-minute candle below 17,980. Friends, close your eyes and take a put. I shall take a put with the SL of just this 17,992 would be my SL. And with that, I will wait for at least 100 to 150 points. That's what I've said here. If it forms continuous red candles and comes below 17,980, then on a 5-minute candle below that and closes on a 5-minute candle below that, then with an SL of 17,980, I take a put and keep a target of 100 points or 17,889, whichever is available to me. But friends, if it comes down from here, 1 red, 1 green, 1 red, 1 green, 1 red, 1 green, and then a green and a green and a red and a green, spend some time here, but does not break 17,980 and starts going up, then please do not take a put. If it comes down, forms a combination of red and green, any combination other than continuous red, and takes support from 17,992 or 17,980, forms a green chin 2. And remember this chin 2, huh? Remember this chin 2. Chin 2 is like this. This candle is called, I call it a chin 2 candle. Remember this chin 2. It forms a green chin 2. Then I shall take a call with the SL of 17,963 and target of 18,114. Note here that this scenario should form in the first half itself. If it's forming around 230, 215, 220, forget it. None of this will apply. Last scenario, if it opens gap up of more than 100 points or gap down of more than 100 points, then ignore all the above analysis and use the trading gap up or trading gap down rule. So friends, I've spent a lot of time on the video. That's all from my side. Please like the video, comment. Let me know in the comment box that in the next webinar, what all you would like me to cover, and I shall definitely cover that. Thank you very much. Please like, subscribe, and share my channel. Sayonara, cheers, bye-bye, and good night.